We have 55 units. How many units are there? Total 55 units are there. Out of 55, the 41 units are in module A and B only. The 41 units are only in A and B. So you can see the module A and B is very huge here. So it will take easily 1 month to cover both the module. And after that, the C and D will be available, and the C and D will be covered within the period of 1 month. Or I can say between 20 to 25 days, we will be able to cover the C and D module, but the A and B will cover maximum period here to cover the syllabus. Now let's start. So we have discussed what are the banker-customer relationship is. Also, we have discussed when the term bank, banker, banking company can be used and when it cannot be used. We have also discussed what is the business of banking. We have discussed the business of banking. But apart from business of banking, bank perform a certain different types of services also, or various form of businesses are provided by the bank. On the basis of that, we have defined the relationship between a banker and customer in a certain different types. Right. So first of all, let me know what actually is the business of banking. What actually is the business of banking? Let me know. What is the business of banking? Okay. Yes, 3 things are there. The business of banking says the first, the acceptance of deposit from the public, not from anyone, but from the public. So accepting deposit from public, very good, for the purpose of lending or investment, and it will be repayable on the demand of the customer. So this is the business of banking that has been given to us. But apart from these 3 activities, depositing the money, or I can say accepting the deposit from public, providing loans and investment, and the repayable service, apart from these 3 service, bank provide various form of business that is defined under the Section 6 of Banking Regulation Act. And it is very much defined under the Banking Regulation Act. If you are not accepting money from the public, if you are not accepting money from the public for the purpose of lending or investment, then you cannot use the word bank, banker, or banking company. So all this has been defined here. We have discussed all these things already. What are the requirements to be called as a bank? First, we have discussed in the section 5B. We have got the definition of banking. Like what is banking? Right, that we have discussed in the 5B. After 5B, we have discussed that the section 5C says in which condition the banking company name will be used. So what is the banking company? That is defined under section 5C. Then the section 7.1 talks about what Banking Regulation Act prohibits to use word the banker, banking, or banking company. When you are not able to use these words, that is defined under section 7.1. The section 7.2 talks about prohibit the use of such words by an individual or a group of individual or a firm. Okay. So these 4-5 sections are very important that we have discussed. Now we have discussed the money lenders are not bankers. And the conditions of to be called as a bank, banking company, or banker, we have discussed that. Now, apart from that, we have also discussed the section 6 of Banking Regulation Act. The section 6 of Banking Regulation Act talks about the various businesses that is provided by bank, and all these are the various businesses that bank can provide. Okay, so this is what we have discussed. Now, who is customer? Who is your client? Who is beneficial owner? All this we have discussed on the basis of for the KYC requirement, and the otherwise we have discussed both, right? Yes, okay. Now, after that, we have started our banker-customer relationship with the first relation between banker and customer. That's a debtor and creditor relationship. In the debtor and creditor relationship, we have talked about like the bank will be a debtor here and the customer will be a creditor here. When the customer deposits money in the bank. If I am depositing money in the bank, it means I am giving money to the banks. It means bank will be a debtor and I will be the person who is a creditor. Okay. In case when I am depositing my money in the bank. Now, the second condition we have creditor-debtor relationship. And the creditor-debtor relationship defines that the bank is the creditor and the customer is the debtor. Now, when I will become debtor when I take loan from the bank. If I am taking a loan from the bank, then it means I am a debtor. I am the person who is taking loan. Clear? Next. Next, we have here the bank as a trustee. So this is what we have discussed already in the last class. Now we have to start as a bank as a trustee. So we have seen that we know that accepting deposit and providing loan, that's a basic business of a bank or a core business of a bank, or I can say that's a business of banking only. But when I talk about apart from these two activities, in the section 6, it has defined that what are the other various businesses bank provides. And on the basis of those various businesses, the bank has the different relationship to be known as a belly, trustee, principal agent, lessor, and custodian. And according to that, we have the next relation between banker and customer, in which banker performs or bank work as a trustee here. Okay, so what are these? Let's understand this first of all. So bank become trustee here. It means you are trusting a bank. About what? Regarding what you are trusting your bank? Regarding anything. If you left something in a bank, you have a trust on a bank, like you will get that back. So any valuables of your, it can be your document, it can be your asset, it can be your property, anything in any form. If you left that with the bank, you trust the bank that nothing will happen to your property. And there's the role of a bank as a trustee will be defined. So who is a trustee? Trustee can be a person or it can be a firm that holds and administers the property or assets for the benefit of a third party. So trustee can be an individual person, trustee can be a firm, it can be a bank. It holds and administers your property or the third person's property or the third person assets for the benefit of the third person. Let's say, for example, I went to the bank. It's a rainy season. I went to the bank, and when I came back from the bank, I left my umbrella in the bank. Right? So now that umbrella is my asset. Now I left that in the bank. So I inform the bank about this particular property, or I inform the person whom I know in the bank that I left my property there, and that inform to the bank, like I left this. In that situation, I trust the bank, like nothing will happen. My umbrella will be in the bank. I can go in the next day and take that from the bank. In that situation, bank presents itself as a trustee. So you can trust on your bank for any asset of yours, any property of yours, like bank will hold it or bank will administer it for your own benefit. That's the trustee relationship bank have with the customer. So the trustees are required to make decisions in the beneficiary's best interest and have a fiduciary responsibility to them, meaning they act in the best interest of the beneficiaries to manage their asset. Okay, that's what we are talking about. Like trustees, they require to make decisions. For whom? For the beneficiary. Like what will be the best decision for the beneficiary? What will be the best decision for the beneficiary's interest? That you have to take. And the trustee will have a fiduciary responsibility to the beneficiary here. It means the trustee will act in the best interest of the beneficiaries in managing their asset. The bank will act in a best interest to manage my asset that will give me maximum benefit. Now, if a customer keeps certain valuables or securities within the bank for safekeeping or deposit a certain amount of money for a specific purpose, the banker, besides becoming a belly, is also a trustee. It will be also a trustee. So if you put any valuable, any document, any security of yours in the bank to keep in the safekeeping or to have a safe deposit in a bank, in that situation, bank is a belly, but bank is also a trustee. So now you can understand that the belly-beller relationship and a trustee relationship is a kind of a similar relationship, right? If bank is known as a belly, the bank is also known as a trustee, and both are almost same. The only difference is trustee at the lower level, we can say, or at the small contracts, we can use the word trustee. In a bigger contracts, we use the word that is belly. So belly-beller relationship in which bank will be a belly and customer will be a beller. So when a customer deposits certain valuables, bonds, security, or other documents with the bank for their safe custody, the bank, besides becoming a trustee, as discussed in the earlier relationship, it also becomes a belly and the customer becomes the beller. Now you informed the bank what is with the bank you are keeping and how the bank have to secure that, how the bank have to use that or administer that, that you will get maximum benefit out of that. Okay, so according to the term of section 148, the Indian Contract Act 1872, the bank becomes the custodian of the securities of the customer, and hence a belly is liable for any loss caused to the beller due to its negligence. Okay, so let's say, for example, I am a customer of a bank. I have given my valuables, my securities, my bonds to the bank to hold, right? And because of the negligence of the bank, let's say my documents, my security got like taken by any other person or got in the loss or something else. In that situation, bank is liable to pay for my loss. Okay, I'm not going to bear that loss. Bank have to pay that because I already informed bank that I am putting my valuables, my bonds, my securities, my important documents with you in the safe custody. So that was the responsibility of the bank to hold it, to administer it, to secure it. But if because of the negligence of the bank, if something happened, then bank have to pay me the loss. So the finder of the lost goods, section 71 of Indian Contract Act, should return any increase in goods animals to true owners. So under section 164, the finder has to take care of such goods as an ordinary prudent man. So these are the example of belly-beller relationship. Okay, so the both are same. Belly and trustee, they both represent the same job of a bank. Like bank have to hold it, bank have to administer it on the behalf of the third party, right? But the trustee, anybody can act as a trustee who holds or administer your property or asset for your benefit. And the belly, when you put a certain valuables of yours in a bank, which the bank has the responsibility to take care of, that's when the bank will be known as a belly. Clear? Let me know, is it clear? Shivaji sir, what you can do drop a message on the Telegram channel of a sir and do ask there, because I have no information about it. Hana, so if sometimes if your class is not happening, you can just drop a message on a Telegram. Someone will reply you there, will inform you about the class. Okay. Last point here is saying that under section 164, like if you have lost something in a bank or somewhere, so the finder means bank finded it, na? So bank is a finder. So bank have to take care of your goods as an ordinary prudence man. है ना? Like let's say, for example, you went to the movies or you went to park or somewhere, है ना? Or you are in your office, you are in your bank and someone left there something. So as a human being, you take care of that. You try to know whose that particular product is related to, and you try to give them and you try to reach them so that you will be able to give them their asset back. That's what we're talking about here. So whoever is the finder have to take care of the goods until and unless it reach to its owner only. Okay, and that's where the belly-beller relationship between the bank and customer will be seen, where the customer will be a beller and the bank will be a belly, because bank have to take care of the asset. Clear? The last point. Now the next relationship we have, that's a agent-principal relationship. The agent-principal relationship. Here the bank will be the agent and I will be the principal, because I am the customer of a bank and I'm ordering a bank to perform certain payment on behalf of me. Let's say, for example, I issued a check to a certain person and I ordered the bank to make the payment of the check on that particular date. Or let's say, for example, I have to pay my insurance premium and I ordered the bank, or I have done the auto debit facility there, in which the premium will be auto debited from my account without, if I remember that or not, it doesn't matter. The amount of my insurance premium will be debited from my account and it will be paid to the insurance company. Now, in this situation, the bank will become my agent. I am the principal. So I am giving an order to the bank to perform a certain service on behalf of me. That's where the banks become the agent and I will be the principal. So you can see bank is agent and the customer is principal. Now here, according to section 182 Indian Contract Act 1872, a principal is a person who delegates authority to another person, namely the agent. Delegate means you transfer. I am transferring my responsibility to the certain person. Like I have to pay the premium of insurance now, but I transferred my work to the bank and the bank became the agent and bank have to perform that on behalf of me. And that's how the bank became the agent and I will be the principal. Okay, so among the ancillary services, it means the related services of a bank rendered by the bank are remittances, collection of checks, bills to pay regularly, electricity bill, telephone bills, insurance premium, club fees, etc. on behalf of the customer. So what you do the auto debit part here and the bank will take care of all the payments of yours. Whether it is your check payment, your bill payment, your electricity, telephone, any bill it is. In that situation, bank will pay on behalf of you. In these cases, the bank acts as an agent, his principal being the customer. Clear? Here, the principal will be the customer of a bank. Okay, so the relationship of agency terminates on the death, insolvency and illicity of the customer on completion of the work assigned. In case of remittances, though the relationship is of agency. So what we are talking about, this relationship between the bank and customer, about the agent and principal, when it will be closed, when it will be ended, it will end in case the death of a customer. You are no longer have to pay the premium. You no longer have to pay the bills, telephone bill or whatever bill it is. Or in case, let's say the person became insolvent. In the lunacy case, you do not have to make payments on behalf of the customer. So you will not be any more agent of a customer. So in this situation, your relationship with the customer will be cancelled or it will be ended. Okay, so that's the relationship between the bank and a customer. Like the bank will be the agent and the customer will be your principal. Sorry. Clear? Let me know till now everything is clear. Is there any other doubt? Okay, next. The lessor and lessee relationship. So what is it? If we talk about leasing, that's a kind of a business or service that bank is providing that is related to leasing. Leasing means something you're providing on rent. You are providing the service on the basis of rent. That's a leasing. So the leasing have the certain works here, like the lessor will be the owner of the asset. The lessor will be the tenant, lessee will be the tenant. Okay, and here the lease asset will be there. Lease asset means the property you are giving on a rent. And lease payment will be there, the rent you are paying. Okay, so section 105 of Transfer of Property Act, it deals with the lease, lessor, lessee. It will be O. The banks provide safe deposit locker to the customers for use on lease basis. So the relationship here is the lessor and lessee or of licensor or licensee. So let's say, for example, I am taking a locker facility from the bank. If I am taking a locker facility from the bank, it means what? It means simply I am renting out a certain area of a bank which is within the premises of a bank. So bank will be the owner now. So bank here is lessor. Okay, and I am taking that locker on rent. So I will be the lessee. Okay, the customer will be the lessee because I am taking the particular area of a bank on a rent. Because I have to pay the rent here. Now I have to pay a certain amount of money to the customer here. Sorry, to the bank here for every month using the locker. Okay, so the bank shall not be liable for any damage and or loss of content of locker arising from natural calamities or acts of God like earthquake, flood, lightning, and thunderstorm, or any other act that is attributed to the sole fault of negligence of the customer. Okay, so let's say if you have heard about it in the Oh My God movie, it has been seen, na? Like that was the case of earthquake. That's the act of God. So insurance company said we are not going to pay you about because it is not involved under our clauses. So that's the act of God. So we are not going to pay amount of that. So the same thing is there in case of locker facility. The bank will not be liable to pay you the amount in case of natural calamity, or you can call it an act of a God. Okay, or if there is a negligence from the side of the customer, then also bank is not liable to pay you the amount whatever you have in your locker. Okay, so bank shall exercise appropriate care for protection of their locker system and premises. So bank should be very careful about it. Like these things should not happen. Like bank have to provide the safety from the fire and theft and etc. But if it happens, it's not what the bank has done. So if the fire happened and because of the thunderstorm or because of the let's say flood or something, it's not in the hand of the bank. So in that situation, bank will not be liable. But yes, if there is certain negligence from the side of a bank, like bank used to, or it is the responsibility of a bank to make the security available in the locker facility. But if somehow bank's negligence has been seen, then the bank is liable to the pay amount. So this is what we're talking about in the lessor and lessee relationship. So let me know, is it clear? So do remember, in the general sense, if you talk about the lessor means the owner and the lessee means the tenant. Like let's say, for example, I am not living in my hometown. So I am living in Gurgaon. So I have Okay. So I'm living in Gurgaon. So I have taken a certain flat on a rent in which I am living. So I will be the lessee. I am the tenant here. And the landlord will be the owner. That's a lessor. Clear? So that's what the lessor-lessee relationship is. It's not fixed for all the condition, Lakshmikant sir. It will be decided on the basis of the individual locker facility. It is not like fixed amount they have defined that this have to be paid. Clear? Should we move forward? Okay. Now, right. Now, the next type of relationship between a banker and customer is indemnifier and indemnified. So, what are these? Let's understand. Indemnified. So, what are these? Let's understand. the session is okay now? Let me know. Is audio and video both okay now? Really sorry, there was some internet issue in the office. So really sorry for the disturbance. Okay. Let's continue. So we have discussed the lesser and lessee relationship between a bank and a customer. Now the next relationship we have here, that's your indemnifier and indemnified relationship. Hana, let's continue that. So let's start. Indemnified and indemnified relationship is what? Bank is indemnified or the indemnity holder. Hana? And the customer is indemnifier. Now, what are these? Let's first understand with an example. Let's say, for example, I went to the bank. I have to pay my college fees. So I went to the bank and asked for a, let's say, 1 lakh rupees demand draft. So bank has issued a demand draft on the name of my college of 1 lakh rupees and bank has given that document to me. Now I was taking that demand draft from bank to my home. So what happened in between? I stopped at a restaurant. I have taken a coffee or something. I have done chit chat to my friends and etc. And when I reached home, I was going to show my demand draft to my parents, and then I see that is not available in my bag. Or somewhere from bank to my home, I lost that particular demand draft. In that situation, I have to pay my fee. So what I have to do, I went to the bank and I am asking from a bank to issue a duplicate demand draft. So first of all, let me know, can bank say no to this? Like, can bank say that we are not going to provide you the duplicate demand draft? Is it possible that bank refused to provide me duplicate document? No, obviously not. So bank will give me the duplicate demand draft, and that duplicate demand draft will be issued by the bank. But in the case of issuing a duplicate demand draft, bank have to face, bank have to face a loss, because what if that particular duplicate demand draft have been taken by some person and that person went to the payment for the fee of the college? Let's say one of my friend have taken that and he or she went to pay their college fee by using that particular demand draft. In that situation, the amount from the bank will be deducted 2 times. So what happens now? The bank needs a security here. The banks need to be secured here from the loss that can arise by issuing you a duplicate demand draft. So bank will tell you to sign an indemnity bond. In that indemnity bond, it will be particularly defined, like if some loss occurs because of this duplicate demand draft to the bank, then the customer will be liable to pay that particular loss to the bank. Okay, and the customer will sign that indemnity bond, and after that, bank will issue a duplicate demand draft. And this is how the relationship between a bank and customer will be raised of indemnifier and indemnified. So customer is the indemnifier because I am giving security to the bank. I am promising the bank if some loss happens, I will be there to pay your loss. And the bank will be indemnified, or bank will be indemnity holder who holds a bond which will be used to take the money from the customer in case of any loss occurs in the bank. Right? So see here, a contract which one party promises to save the other from the loss caused to him by the conduct of promisor himself or the conduct of any other person is a contract of indemnity, in which section, which is defined as section 124 of Indian Contract Act 1872. Achha, do remember these sections also, these sections can be asked in the paper. So do remember in which particular act, in which particular section the particular term has been defined. So that's what we're talking about. What is this particular contract actually is, in which one party is promising the another party, like if certain loss happens, I will be there, I will bear the loss. That's what the indemnity bond is. Now in banking, such relationship occurs in transaction of issue of duplicate demand draft. Your duplicate fixed deposit receipt, like I have had a fixed deposit in a bank of 10 lakh rupees. So bank will give me what? Bank will give me a piece of paper which will define that I have given a 10 lakh rupees FD to the bank for the 10 years period. And that paper will be a proof of that particular FD. But I misplaced that paper. So apart for in this situation also, bank will give me a duplicate fixed deposit receipt. है ना? So in that situation, this relationship will be created. So in these cases, the person availing the facility will compensate the other for any loss arising from the wrong or excess payment. Clear? Like the payment has been done 2 times. I have done the payment and the other person who have taken my DD, he also done the payment. So in that situation, bank have to be secure, and that's why bank will tell the customer to sign an indemnity bond, and after that bank will provide the duplicate document to you. Clear? So bank will be the indemnified or the indemnity holder, and the customer will be the person who indemnified to the bank. Okay, now, so we can see all the relations we have seen between bank and customer, they all have been summarized in this particular list only. So first we have a deposit in bank. If I am depositing a certain amount of money in a bank, then I am giving money to the bank. So I will be the creditor, right? In case of deposit money in a bank, I will be what? I will be a creditor and the bank will be a debtor. Because I am depositing money, I am giving money to the bank, so bank will be the debtor. Now, loan from bank. If I am taking a loan from bank, it means I am taking money from the bank and bank is giving me loan. So bank will be a creditor, I will be a debtor. Okay. Next relationship is safe custody. In safe custody case, I have given my valuables, my documents to the bank, which bank will take care of it. So bank will be the belly and I will be the bellow. Clear? In case of locker facility, I am renting out a certain location or certain area of a bank for a particular period of time for which I have to pay rent to the bank. In that situation, bank is the owner of that particular area, so bank will be the lessor and I will be the lessee. It means the tenant who is paying the rent to use that particular area, right? Now, collection of check. Sorry. Collection of check on behalf of me, bank is doing the collection of check. Like I ordered the bank to perform this activity. So bank will be my agent and I will be a principal. Clear? Now, purchase of a draft. If I am purchasing a draft, the purchase of a draft, it means again, I have given money to the bank now to issue a draft. So I will be the creditor and the bank will be a debtor. Because I have given money to the bank to issue a demand draft. So I will be what? I will be your creditor and bank will be a debtor, right? Now, payee of draft. In case of payee of draft, है ना? Payee means the receiver, the person who is receiving the money of a draft. So here I will be the beneficiary because I am receiving a payment of the draft and bank will be a trustee. Now, why bank will be a trustee? Because let's say, for example, Mr. A has issued a demand draft. He has taken a demand draft from the bank. So Mr. A purchased a demand draft from a bank. So Mr. A is what? Mr. A is a creditor. And the bank is a debtor here. Hana, in case of what? In case of purchase of DD by Mr. A. So Mr. A has given money to the bank and then the bank will be a debtor and the customer will be a creditor. So Mr. A is a creditor. Now Mr. A has told to the bank to issue a demand draft on my name. So let's say the payee of the demand draft is me. Payee of the demand draft is me, that is Amanjot. Clear? So I will be the beneficiary. So now I trust the bank. I have given the demand draft to the bank because I trust the bank. Bank will give me the money. So I will be the beneficiary and the bank will be a trustee here. Okay, who is going to take care of my demand draft here? Now, pledge. Acha, what is security? If I am taking a loan from a bank, let's say for example, if I am taking a loan from the bank, I have to provide a collateral. Collateral is simply a security you are providing to the bank to take a loan from the bank. Like in case in future, if you are not repaying the loan of a bank, bank will use that security, bank will use that collateral and collect its money from the customer. So collateral is a security. It's a security, or I can say, okay. So that we can say that collateral is simply a security. So we have pledge. We have hypothecation and we have mortgage. These are the three basic type of securities. Now let me know what is the difference between these three. Pledge, hypothecation and mortgage. What is the difference between these three? Possession and ownership will be different, okay? Based on the possession. Acha. Is there any other difference? Apart from possession, is there any other difference? Let's say if I talk about pledge and hypothecation, they are movable securities. You are giving a certain thing that is movable. Any kind of thing that can move from one place to another that you are giving. But in case of mortgage, it will be what? It will be immovable. It is your immovable security. That's the one difference, right? Now, immovable, you can easily understand that will be your land always. That will be your land always. So you can have an example like house loan or home loan, you can say. Not the house loan, we can write here home loan. Example of mortgage will be your home loan. Okay. Now, how you will differentiate between pledge or hypothecation? They both are movable. They both are movable. Now, so the difference will be done on the basis of possession of a loan. So in the pledge, it is movable, but the possession will remain with whom? The possession of pledge will be lender. It means the bank. Okay. And in case of hypothecation, the possession of the hypothecation will be with the borrower. It means the customer. And if you need example, we will have a gold loan. In the gold loan case, I have to give gold to the bank. Bank will have the possession of gold and bank will give me the loan. In case of hypothecation, let's say we have a vehicle loan. Vehicle loan will be your example for your hypothecation, in which whatever I am taking, a car or bike, whatever, the vehicle will remain with me, but the papers of or the documents of the vehicle will be with the bank. That's the hypothecation. So in the hypothecation, possession remains with the borrower, it means customer, and the pledge, it will remain with the lender. Acha, what will be in case of mortgage? In case of mortgage, who will have the possession? Let me know. In mortgage, who will have the possession? Pledge possession with us. No. In pledge, the possession will always remain with the lender like a gold loan. Do remember this. Possession in mortgage, possession will be with borrower, bank, customer, borrower. Everyone is giving different answers. In case of mortgage, possession usually remains with borrower. Usually means why I use this term. Why I use this term, that is usually. It means maximum number of times. Usually means maximum number of times it remains with the borrower. But in certain cases, it can go to the lender also. It can go to the bank also. So that's why I use the term usually. Maximum number of times it remains with the borrower, but in some cases it can go to the bank also. Like for example, I have my house and I have taken loan on that, but I'm not using it. And bank was looking at that same area for a certain area or a certain building in which bank can start its branch, or bank can have a currency chest, or let's say bank can have a ATM or something. So bank want a certain place there to rent out in the same area, and I'm not using that particular property. So what can I do? I can give the possession to the bank of that particular property, and because with the rent amount I can pay my installment to the bank, and in that situation it can remain with the lender also. That's the mortgage condition. Clear? So this is how the three types of mortgages we have. So in case of pledge, what happens? Bank is giving loan to the customer by taking a certain security. By taking a certain security here. So the bank will be a pledgee and the customer will be a pledger. Pledger means you are taking an oath. Like if I am not able to repay your loan in the future, I am giving this security to you. You can repay, you can take your loan back by using this particular security or by selling this particular security. That's why the customer will be a pledger. Okay. In case of mortgage, the same thing is bank will be a mortgagee and the customer will be a mortgager. In case of hypothecation, it is same. The bank will be a hypothecatee and the customer will be a hypothecator. So these are the three categories of or the types of your collaterals. Clear? Let me know pledge, mortgage and hypothecation is clear to all of you. Yes or no? Answer quickly. Clear. Okay, next. Next, we have here standing instructions, sale, purchase of security on behalf of customer. In both the cases, both the cases, customer is giving instruction to the bank to perform certain activity on behalf of the customer. In that situation, the bank will be the agent and the customer will be a principal. Like you ordered the bank, that bank can sell your securities or the shares or any kind of security you have with the bank. You ordered bank to sell it or you ordered bank to purchase it from someone else to make payment. In that situation, bank will be your agent. Next. Money deposited but instruction not given for its disposal. You have deposited a certain money in the bank, but you haven't given instruction to the bank. Like where it should be used or where it should be put. In that situation, you are the beneficiaries and bank will be a trustee. Bank have to take care of your deposit. So in that situation, bank will be what? Bank will be a trustee and you will be a beneficiary. Okay. If any article you left in a bank by mistake, again, bank will take care of your article on behalf of you. So bank will be your trustee and you will be a beneficiary. Okay. You have given a certain shares for sale to the bank. So bank will be your agent and customer will be your principal. So these are the total banker-customer relationship we have discussed in your first chapter. So let me know, is it clear to all of you? This is the summary of all the relationship between a bank and a customer. So let me know, is it clear to all of you? So do remember, you have to understand the concepts. Like in which case bank will be a trustee, in which case bank will be a belly, in which case bank will be a lesser, in which case bank will be a pledgee, mortgagee or hypothecatee or agent. If you understand this particular conditions, do not try to mug up the relationship. Try to understand the condition, what bank is giving to the customer. According to that, we have decided the certain relationship between the banker and customer. So if you understand the condition or the service bank is providing, you will be able to answer what relationship banker and customer is having. So do not try to mug up the concepts here. Try to understand like what service bank is providing to the customer. According to that, they have a relationship. In the safe custody, see what is the difference. In the safe custody, bank is your belly. In the locker facility, bank is your lesser. Now, what is the difference between these two? In case you have given a certain valuables to the bank to hold it, to administer it, then in that situation, bank is a belly. Because you trust the bank. I have a certain document I have given to the bank. I have a certain asset I have given to the bank. And I told bank to hold it, to administer it. Because I trust bank. I'm going outside the country, let's say for example, for 6 months. So I have given a certain document to the bank and I informed about it to the bank. Like I am giving you my property papers. I am giving you my asset. That's my luxurious car or whatever the asset I have. I informed about that asset to the bank and I have given that to the bank. Like do make sure you hold it, you administer it for a certain period of time. That's a belly relationship because I trust bank. That's why I have given that asset to the bank to hold it and to administer it. In case of lesser, I'm not giving a certain property to take care of it to the customer, to the bank. No. I'm using bank's area to secure my property, to secure my valuables. Because I know the chances of theft is more at my home in comparison to the bank. So I'm using a bank's premises to secure my particular asset in the banks. In that situation, I'm renting out the property from the bank. And that's why bank is a lesser. Let me know, Dipti ma'am, is it clear? The difference the difference between both is clear. Okay, clear. Chalo, let's move forward. So these are the total banker-customer relationship we have to understand. Now, the different types of deposits we have. Achha, before understanding the different types of deposits, I want to ask you, what is the difference between banks' assets and liabilities? So every business will have a certain asset, every business will have a certain liabilities. We know that. Hana? So let me know what is the difference between assets and liabilities of a bank. In case of mortgage, why it is usually with customer? Because Nayak sir, I have told you here, in case of mortgage, you are giving immovable property. Immovable property always be your land. It can be your farmhouse, it can be your go down, it can be your house you are living in. So that maximum number of times you have ownership on that. And bank will only have the papers of that particular property of yours because you are living in that. Now you are running your business in that. Let's say, for example, if the farmhouse is there, go down is there. So you have just given the papers to the bank, but you are using that property in maximum number of cases. But somehow, let's say you are not using that property and bank is looking for a certain location. So you can rent it out the same property to the bank. In that situation, possession will also go with the bank. And that's why I use the word usually here. I hope it is clear, Nayak sir. Assets means loan, advances, liability. Very good. That's very good. In case of assets, assets means something that belongs to the bank. And it is your loan and advances. So whenever bank gives loan and advances to the customer, that's the asset of a bank. Right? Now, the liability of a bank is the public deposit. Whatever customer deposits in the bank, that's the liability of a bank because whenever customer will ask, bank have to pay for it. Hana, bank have to give that deposit to the bank. So in case of assets, if I talk about, there are two types of assets. The first we have is standard asset. Right? And the second we have non-performing asset. A standard asset and non-performing asset, these are the two types of assets. Now, if I talk about the deposits, there are two types of deposits also. First, we have demand deposits. And second, we have term, or you can call it a time deposit also. Term or time deposit. Clear? Now, we are not going to talk about the asset here. Assets are of two types, standard and non-performing. That we are going to discuss in the NPA wala chapter. Here we are going to talk about the liability. So liabilities are of two types, that is demand and time. So demand deposit means a kind of accounts in which bank is getting the deposit from the side of the customer, but this account will be operated on the basis of the demand of the customer. What does it mean? It means simply that whenever a customer wants, he or she can deposit the money, or whenever a customer wants, he or she can withdraw their money. That's what the demand deposit means. Like these accounts will go according to the customer's demands. So that's the CASA, current account and savings account, right? In case of term deposit or time deposit, it's very simple to understand. For a particular period of time, and for a particular period of time, you have deposited a certain amount of money in the bank. And that's why it's a time deposit or a term deposit. So it will be a RAFA, recurring account and a fixed account. In general, we know them as a RD and FD. है ना? So this is the types of deposit accounts we are talking about. Deposits are normally classified as demand and time. So demand deposit payable on demand, low interest rate or no interest will be provided. It includes current savings, overdue deposit and unclaimed deposits also. And unclaimed deposit, it means the customer have not claimed for a deposit. And these type of deposit after 10 years will be given to the RBI under the DEF scheme. So there is a DEF scheme that was introduced by Reserve Bank of India, and in this scheme what happens if a customer is not claiming for his own deposits in a bank for a period of 10 years. So after the completion of 10 years, whatever the amount was there in the customer's account will be transferred to the DEF scheme. Okay, and under the DEF scheme, RBI will use that fund for the awareness. For financial awareness, for financial literacy, RBI can use this money of the customer. Let's say after 10 years, after 12 years or 15 years, customer comes to the bank to claim his or her deposit. Then the bank will provide that deposit to the customer. And immediately, and the bank will take refund from the DEF scheme of the RBI because the customer have taken his or her money back. Clear? So this used to happen under the unclaimed deposits. Now the time deposits we have, that is repaid after expiry of the deposit period. High interest will be paid, which will vary according to the duration. If I am having a RD for 6 months, the rate of interest will be different. If I am having a RD for 5 years, the rate of interest will be different. Same with the FD. If I am having a FD for 7 days, the rate of interest will be different. If I am having a FD for 5 years, the rate of interest will be different. Right? The time deposit are for a period of ranging 7 days to 120 months, period with or without reinvestment plans. So, in case of RD, this is very important. Do remember the maturities of RD and FD in a different cases. If you are having a FD and RD in a bank in Indian rupee, in INR, the FD minimum duration is 7 days and the maximum is 10 years, that you all know, right? And the RD minimum duration is 6 months to 10 years, that you all know. Now, if I'm having a FD in bank, but in foreign currency. So first let me know what this type of account is known as. If I'm having a FD in the bank in foreign currency, what type of account is it? No, NRE will be CASA for all. Very good, it is FCNR account. Foreign currency non-resident account. In case of foreign currency non-resident account, the minimum period will be 1 year. It can be written in your paper in the option as a 12 months. And the maximum period will be 5 years, that's your 60 months. So do remember in both the units. So if you are having a FD in a bank in foreign currency, minimum 1 year, maximum 5 years. 12 months or 60 months. But the other one more point is here. If you are having FD in non-banking financial companies, what will be the minimum? What will be the maximum duration? In NBFC, you are having FD because we have NBFC deposit also. RBI has allowed to the NBFCs to accept deposit from the customer, but under a certain scheme or arrangement only. So what will be the duration? 1 year to 5 years, 6 months to 2 years, no, minimum 1, okay, very good. Minimum is 1 year, again the 12 months, and the maximum we have 5 years, it means 60 months. Okay, so the same amount will be there, same duration will be there. So do remember these 3 durations, that is very important. In all the cases, you should know the minimum and maximum duration. So this is the types of deposit we have discussed. Now, a certain point about demand deposit. First, demand deposit are classified into current and savings account. Current deposits, the deposits in current account are working fund of business or enterprises or fluctuates widely and are not paid any interest. No interest will be paid in the current account, right? And you use your business here. for business purpose. Unlimited transactions will be allowed. In the current account, minimum deposit is mandatory. You have to maintain a minimum deposit. No interest will be paid. Apart from that, here you will maintain this account for unlimited number of transactions. No limit on the transaction is there. And one more important thing, it will be used for the business purpose, for firm and etc. Okay, and overdraft facility will also be available. In the current account, you have an overdraft facility also, right? That's your current account or current deposit. Now, if I'm talking about the savings deposit, in the savings deposit, interest will be paid. And why it was introduced? Savings accounts are introduced for savings habit and facilitate the regular transaction through banking system. It attracts the interest. These fluctuates alter by are less volatile. So in the savings account, a fixed rate of interest will be paid to you, Hana, and that will be very minimum. And you can open this account to build a savings habit here. Overdraft facility will be not available. You can open this account with the minimum balance or without